Is the Fed lying? The bond market seems to think so, but the stock market, they're buying it hook, line, and sinker. Welcome to the Money Runner. I'm David Nelson. It's August 31st. This is your Market Money. The Jay Powell Jackson Hole speech that has turned bulls into bears and doves into hawks has taken down the broad market better than 5% since Friday and now off 8% from the highs earlier this month. Meanwhile, fixed income markets don't seem to be buying the Fed's born-again tough talk. Fed fund futures going all the way out to early 2024 are up just 20 basis points. And more important, still looking for cuts in the back half of 2023. The higher for longer thesis, I think, is flawed, in part for some of the reasons I laid out yesterday. The Fed can't bring down inflation with just monetary policy. This is not just a demand issue. Coming out of COVID, the world was upside down. Shipping was struggling to catch up with the world as the world came out of the bunker. And supply chains around the world just fell apart. There's no level of interest rates that can fix that. Companies couldn't even get a handle on what merchandise their customers wanted. In some cases, they bought too much of one thing, not enough of the other. The Capital Link Dry Bulk Index, this chart, which is 15 shippers, is off now 33% from the highs. Copper is off 22% from the highs, and lumber is off as well. These are leading indicators of inflation starting to come down, even if it isn't showing up in the data yet. In Europe, energy prices fluctuate wildly, not because demand is so star-spangled awesome, but because they live under the threat of Putin, who can turn off their supply of energy anytime he wants. Nord Stream 2 right now is being shut down for so-called maintenance. Look, the Fed screwed up so badly last year, there's pressure from inside the Fed to go too far. Where I think the Fed can and should do their work is in the unwind of the balance sheet. But it's going to have to be at a pace markets can absorb. They've been piling it on for more than a decade. You want to collapse the economy? Unwind this too quickly. This week, all about jobs. And I guess markets will have to live or die on Friday's number. Currently, consensus is for a robust 300,000. And I guess it's another one of those moments where good news is bad news. If we get another hot number like last month, markets will probably react to the downside. But sometimes it takes a while for the data to catch up. Here's a list of companies just in recent months announcing layoffs: Peloton, Snap, Wayfair, Shopify, Vimeo, Tesla, Remax, Microsoft, JP Morgan. I could go on for another 5 minutes. And just moments ago, Bed Bath & Beyond announced they were cutting 20% of their workforce. The message I want to leave you with is the following. Economic health is an ecosystem and requires all the members to do their job. The Fed can't do this on their own. Their tools are too limited and frankly take a long time to take effect. Restoring supply chain health is a big part of this. And finally, the biggest job belongs to Washington. The Fed can and should do their job and restore a healthy monetary policy. But if they try to do the government's job and make up for the lack of fiscal discipline, they will fail. And markets will fail with them. All right, that's it for today. Thanks so much for joining. I'm David Nelson.